Hi traders! Microstrategy is up a touch from the September lows, but still trading very close to key supports as seen on a weekly log-scale chart. In today's short episode, I will infer you two possible scenarios, a bullish and a bearish one. For each one of these future outlooks, I will show you which chart elements I'm monitoring to come back to it at a more interesting moment. This could be to enter the market, add up or liquidate part of an existing position, write a forecast for a client base, and so on and so forth. So let's get it. As we speak, Microstrategy stock is sandwiched in a triangular area just above key historic support. Tumbling below these foundations, Microstrategy stock could be carried into a new low ground, not in terms of price, it has traded at those price levels a few years back, but in terms of price structure. A sustained close below 180 could only be defended with descending support lines. There is no ascending support line from previous lows where bulls could eventually build a barricade and slow down the price in case of a collapse. The same for short sellers that would need clear targets on a way down to aim for and thereby dissipate downside momentum with their profit taking. If that happens, if the stock revisits deeper lows, we need to see a recovery made at least of two consecutive swing lows exhibiting the same ascending inclination as the support line that is right now threatened to be broken to the downside. In such a scenario, it becomes imperative to look for a slightly upward sloped double bottom pattern on lower time frames. On the other side, to extend a recovery from multi-month lows, the first barriers to clear are the descending channel lines just overhead. A critical turning point is emerging in April 2023 with three resistance lines intersecting on a chart. The horizontal $430 resistance, a level lost in April 22, the descending resistance from the February 2021 peak, and the descending resistance from the January 2020 highs just before the global lockdown-induced crash. The April 2023 intersection is confirmed by a series of other line intersections at lower levels. Notice from other videos in this channel that we start to see April 2023 emerging as a key level on several other assets. I'm not seeing any confirming signals that this train is about to leave the station soon. A more likely scenario is that the stock plunges below the aforementioned historic support, offering a very risky but also very lucrative opportunity to buy the stock, perhaps below the $100. In that sense, the descending channel support that would pave the road to the sub-hundreds has proven to be a lucrative buying area, at least in the short term. I'm sure risk-oriented buyers will repeat their engagement if the prices get in touch with this line for a third time. The two rallies that started at this line accomplished 340% the first time and 160% the second time. On the way up, I would wait for a tentative break of the first descending line, followed by a break of the $281, and finally a break of the next descending line that proved to be a strong barrier during August 22. Fast forward 2 years and in April 2024, a target confluence starts to emerge at the all-time high $3,350, a 1,350% gain from where it trades as we speak, exact the same potential that was contained in the rally from March 2020 lows to the February 2021 high. Conclusions we can draw from the analysis. It is still premature to engage on a continuation bet. The price action is still in a neutral zone while enveloped in this current triangular area. Waiting for the first barriers overhead to be cleared would provide us with a better risk-to-reward setup. With a time horizon of April 2024 and a potential of hundreds of percentage gains, there is no need to rush. On the downside, don't be surprised to see a plunge below key supports, and if that happens, look for the very short-term structure to get some clues. Or if you prefer, let the monthly chart close the bar and check if the close is below or at or above the pierced supports. Closing at or above would be an upside continuation hint. Hope you enjoyed the analysis. If you did, please click the like button and subscribe to this channel. Thanks for watching. Bye for now.